Welcome back to the Everything Property Podcast. Today's guest is a mortgage broker who is helping us figure out the transition from residential to commercial property. He's no stranger to writing loans, 4 a.m. starts, bucket loads of gel, and now fatherhood. Joe Daoud, welcome to the Everything Property Podcast. How are you?
Mate, Dave, thanks so much for having me. Bucket loads of gel. Oh man, that one hit right here. You know.
I always try to personalise the little intro for everyone.
Mate, I just have to include, okay, if I have a skin fade, I'm going to look like I'm from the area, okay, and I'm one of those guys. If I grow my hair too long, my ears are going to get hot and I'm just going to be constantly flustered, okay, because I used to have a ponytail. And then, this is the worst episode ever. This is the worst thing. I'm not going to explain my hair anymore. I like my hair gelled like this, all right?
Nah, fair enough, bro. You look good. All right. Man, I want to jump into it. I want to give everyone, how I usually set up these episodes is we get a little bit of context into your working history and, starting it simple. I know you did a bit of development management too.
Yes, I did.
So I'm a bit keen to hear a bit about that, coming from a similar background. Yeah. And then I think we can go into, there's a couple of topical things in Australian real estate and policy at the moment that we can touch on, and a little bit around sort of that residential to commercial leap that you're seeing a lot of sort of your clients make. And mate, there's plenty in between. So if we had to know about Joe Daoud at university or school, was it always mortgage broking, or where did you start off in this space?
I was a shit student. I think you could tell.
ADHD?
No, you don't say. Of course.
Yeah, I get that fob. Yeah.
And I think a lot of it stemmed from. Well, first of all, ADHD is actually biological. I've been taught that. But whilst I was in class, if I did put my focus into something, I would perform well. But I never found anything interesting enough that I wanted to, put my wholehearted focus into it. I was a bad student in the sense that I was just lazy. Okay, I was more interested in deep diving into the world of the NBA or Dragon Ball Z lore or Harry Potter. Like, those are my three key things. Than I was like actually studying for an exam. So I left school and I was 131 kilos, significantly overweight. It broke that cycle where I would leave school, go to drive-through Macca's on the way home, pick up Big Mac, whatever it was. And it let me kind of start discovering myself. So I left school, lost 50 kilos in like 26 weeks. Yeah, wow. Mad crash diet, okay? And I'll be honest with you, I was probably under-eating without knowing it. Like, look at yourself. You're in good physical shape. You look like, you've got some muscle mass on you.
Not paid to say it either.
But when you're training, you're doing weights training and stuff, you need to eat because that's how you develop your muscles. So I was probably what we would say under-eating. I was probably taking in like 1,500 calories a day. I'm 6'2", you're 6'2". 1,500 calories isn't a lot.
Yeah. We
need to be eating constantly, especially for weight training and stuff. So once I, discovered how to actually diet properly, that's when I got back to more of a natural 90 kilo weight. So I got dropped out to 79. My mates were calling me Starvin' Marvin because I looked like that South Park character. And then, got back up to 90 kilos. And so many people coming to me and they were like, how did you do this? And I was like, you know what? I should become a personal trainer. There is something here and I should start getting into personal training. And went into that world, went into the world of selling myself, selling a business, setting up boot camps. And what I did, I actually marketed really well and I rapidly grew. I had 64 inductions for one of my summer boot camps. I'll never forget it. And we were charging, I think it was $50 a week. 64 applicants. That's a good wicket for someone that was 21 years old.
That's a lot of Maccas.
Yeah, that's a lot of fried chicken. Yeah. But went and did a Euro trip with the boys, and quickly realized that the moment I'm not there, I'm not making money. Okay, and I'm thinking to myself long term. Okay, I want to be able to take a holiday. I want to be able to, go overseas. I need to be able to stimulate or create for myself residual income, or as the gurus like to say, passive income, something, you know what I'm saying.
Yep.
But what happened was, we got hammered one night. I get home, I'm having an existential crisis. I'm 22 years old, 23, and I'm going, I'm losing money every week that I'm here. I'm not making the money that I was when I was in Sydney. What am I going to do? So I opened my laptop and start asking myself the questions. Joe, what were you good at school? Literally, this is what I did. I like maths. Okay. I was always good at maths. I remember, I'd come first in the class. I was that student, just numbers worked with me.
Yep.
And then Wolf of Wall Street, I'll never forget this, was out at the time in the cinemas. So I was like, what am I going to, okay. I'll do finance and economics with a second major in mathematics. And then I looked for the closest university to my house because I didn't want to drive too far. And I saw ACU offered the program for mature age students. So it wasn't based on your UAI at the time. Now it's called ATAR. Mm-hmm. And I went into uni, and by week 3, I will still never forget this. Imagine a horrific student all through school was told, no, you can't do this, or you're not good enough, or you're not smart enough to be able to do this advanced level of mathematics. By week 3, my lecturer had me teaching the class for people that were getting left behind because I was so excited by it all.
Wow.
So imagine you're saying ADHD. ADHD isn't you can't focus on one thing. It's you only really want to focus on the things that bring you that dopamine hit and bring you that enjoyment. So I'm so excited because I'm at uni, I'm learning this new skill and everything. So go to uni and all of a sudden I'm topping the class in maths, topping the class in economics. I'm still in touch with my university lecturers who want me to go to classes and, speak and explain all that stuff. So it was a really interesting thing. But you ask me, how do I get into mortgage broking from that point? Economics and mathematics is a very general type of degree. Or you're an economist. What does that mean? Does that mean I now work for a magazine and do modeling? Does that mean I go I go the next level and become an actuary and start, working at that level in the bank? I'm a salesperson. You could see this from a mile away, and you hear the way that I talk. That I'm not meant to be behind the desk and doing spreadsheets all day. So I started to just apply for jobs, and then Macquarie calls up, and Macquarie goes, yeah, we really want you in here for an interview. I'm sitting there, I'm like, oh, Macquarie Bank, yes, I'm gonna get into capital markets, I'm gonna get into growth, I'm gonna be helping model with these things. I get there, they loved me. They're like, yep, you're gonna be a senior banking specialist. I don't know what that role was. That was my title. I get in there, they give me a servicing calculator, they give me credit policy, they take me through 2 weeks of credit training, and they go, yep, you're in home loans now.
Wow.
Yeah, so I'm like, okay, I'm in home loans and I'm doing mortgage lending. Had no idea. Like, I was sitting there, I should have been fired 15 times in my first few weeks.
Because at least you're honest.
Like, man, I've got a funny one. My manager was coming over to tell me off because I missed an email or something like that. And I'm certain I was getting fired. I am 100% certain I was getting fired at this point. And I'm on the phone with the client, and I'll be like, oh, I'll be right with you. Like, I'm just on the phone with the client. And she's like angry, but she could see that I'm also assisting someone. And then I made sure I stayed back that night, and I was the last person to leave. And that's how we get into the morning routine and stuff later. Yeah. But I made sure of that. And then I still remember it just clicked for me one day, and I was like, wait a second. If we get a deposit this big, if we get, need to borrow this much, if they've got this much net profit, this is how we help them get a home loan. And I could quickly see that the people I was helping, because I started to really understand Macquarie's policy, I really started to understand that this is someone's house. This is where they're going to live. This is what they need in order to be able to help their families grow. I became more passionate about it, and I became addicted to helping people. Okay.
Yeah.
Fulfill their property dreams. Yeah. And that's where the hyper focus came in from there too. So people ask me, well, how did you become a broker? Yes, it was by accident. It's home loans and mortgage lending. It's not the most exciting form of work, but because I loved it so much and I saw what it could create for people, that's what drove my addiction, and that's what drove me to love and, wanting to start it simple and wanting to get into that. So you wanted to know the background. How does it all start? That's how it starts, man.
I want to ask you as well, because there's a bit of that story that resonates with me with, I've probably got ADHD too, but Tell me, do you think you were a born employee or a born employee or a born employer?
That's a very good question.
The boss or...
So being an employer means you need management skills and you need to be able to get people to adhere to certain parts of the business, their KPIs, their roles, their responsibilities. You need to spell that out. I can tell that you're a very intelligent person and you are a problem solver. How do I know this? Because you do a lot of your own self-video editing. You also have worked in the development space. This isn't stuff that's easy for the everyday person. Usually people just specialize in one of these things. For you to be able to manage 10 or so people, you have to sit down and force yourself to say, okay, this is going to be their direct roles, this is going to be their direct responsibilities, and this is going to be their KPIs and how they are judged every single month. For myself, okay, that wasn't me. So I wouldn't say that I was a born employer, but I definitely wasn't a born employee. I had to learn the skills to become an employer.
You have that entrepreneurial spark?
Yes, 100%. No, everything's a business for me. Yeah.
What's the transition for you, or what's the moment that says maybe Macquarie or the DM work that you're doing isn't for you now, and it's like it's simple, but you need to go out on your own and you need to do your own thing. Like, so, what's that moment for you? I'm interested.
Well, it was actually emotional. I get back from a holiday 2 days later. Okay, so I get back to work, start looking at my deals. Where's everything going in my pipeline? And Dad walks into my room on Sunday night. I'll never forget this. And he goes, I'm having a heart attack. I go, what are you talking about? You're standing right in front. He goes, I'm having a heart attack. Drops. Dad's 116 kilos. Okay. Thankfully, my brother and I, we both go to the gym. We get him in the car and we speed to the hospital. Okay. My brother's working in Queensland. He's working in Queensland at the time. That's where he was in Redcliffe. So he's down and up. He's up in Queensland 5 days a week and then comes down back to Sydney on the weekend, spend time with us. I stay with Dad overnight in the hospital because Charlie has to go to Brisbane, my older brother. And I call my manager at 7 a.m. and I go, Dad's just had a heart attack. Dad's had a heart attack. I don't know how to explain this to you. And she goes, take time off. Don't even log a sick day. Yep. Great manager because she always empowered me. But she's like, don't log a sick day. Do what you need to do over there. Doctor walks in 7:30 in the morning, confirmed heart attack. These are the blood cells, everything. And I'm sitting there, I'm like, whoa. And Dad's got a couple projects that he needs managed. Lebanese, one eyebrow. We're in property, we're in development, right? Okay, so that's what the family business.
Lebanese property developer and builder? That's the first I've heard of it.
No, they don't exist in Australia. What are you talking about? So Dad needs someone to come help him manage everything because he's not in good health and he needs to deliver a project for someone. Okay? Charlie's in Brisbane working 4 or 5 days a week. He can't take over it because he's got his own business and he's taken on the risk up there. Okay, I've got 3 sisters, God bless them. Okay, but one's in marketing, one's in PR, and the other one has her own dress hire shop, very successful. They can't step in. So I'm like, okay, I guess I have to leave Macquarie and learn a whole new skill. And that's how I ended up in the property development side. So we delivered Dad's final project. This was his last one. It was a heritage project with a hotel attached. Yeah. But there was a heritage church. There was 25 units. Yeah. Okay. So 3 stories of units, and then attached to it was a 60-key hotel for Quest service departments. So this is a big project.
Nice size project. Yeah.
I'm coming from the world of mortgage lending. Okay. I'm Nick's son, and I'm sitting there, and I'm like, I'm out of my depth here. And I said that to him. I said that to my brother. I go, I don't know these things. I don't know all these things required within the BCA. I don't know the fire code. I don't know that, that in the basement, there's certain conditions for the air conditioners and the vents. And there's so many things that are involved when it comes to that sort of stuff. Yeah. I don't know these things. I go, who am I going to go to? And thankfully, Dad had a project manager on the job that he had been working with for 15 years, and he had his right-hand man right-hand man who had also been there for a number of years. And I was always able to go to them, but communicate back to my old man, say, hey, this is what is required in this project. Hey, they want to be able to do this. The wet and dry fire guys came. They said this might not be a good solution for this certain egret. Like, we need to put fire doors in this section. And I was communicating that with my dad as he's recovering.
Okay.
But it's his final project. We wrapped that up 2019. We didn't have anything to go from there. I have now worked for myself for a year, and I'm like, I don't really want to get on the train every day at 5 a.m. And what's my bonus going to be? Because the bonus is discretionary. I want to be able to earn my own income. So I don't want to have a discretionary bonus or income. I don't want someone else to dictate, hey, this is what we think you're worth. And then look at things like, oh, we're not that profitable this year. This side of the business didn't do well. So I didn't want to go back to the corporate world. And I always remembered what people said to me on the phone whenever we would either settle a deal or have them formally approved. It was, thanks for making it simple. Thanks for making it simple. So I just go online and I go, it's simple.com.au, is it taken? No. Like mad. Wow. Yeah, so it cost me like $0.01 to get that. Registered the ABN. Went on Easy Companies. I don't know if you've ever heard of easycompanies.com.au. I'm like, yeah, I've got to register a company. Register a company through there, and it's simple begins. And
off and racing.
Off racing, and it was a long journey ahead, but I'm grateful for every single part of it because it makes you who you are.
Tell me a little bit around one thing I have a lot of respect for you for is the morning routine. Run people through. Some people out there that aren't following you on socials, but run me through the average morning routine that Joe does. Maybe pre-baby, or I don't know if it's the same post-baby, but at least pre-baby. Run me through this morning routine and how that helps you set up your day.
A lot of people don't believe that I was doing this, but I knew this was going to happen. That's why I did it. That's why I posted about it every morning on Instagram. Yeah. Okay. I wanted people to know that this wasn't a one-day thing. This was an everyday thing. Every day when they wake up, whether they're up at 5, 6 or 7 a.m., they would see a post from me, 2:58, 2:31, 1:57 at some certain point, wake up super early. And the reason that actually came about, my morning routine came about, was out of necessity. It wasn't out of fun. It wasn't, oh yeah, I'm going to go do this now. It was not born. It was not created because of that. It was created because we had an inefficient system, in its simple, where I was writing 90% of the loans. Okay. I might have hired and told people, hey, you need to come, step in, you need to do this. You need to be really careful with who you interview, because when you interview those certain people might interview really well. But if you don't give them key roles, responsibilities, and outlines of what they need to do week to week and judge them KPI wise every single month, then you will fail as a business owner. And that's what was happening to me. I was failing as a business owner because I was trying to plug in holes where I should have been building systems. I didn't have the systems in place, so I was writing every deal. And what I noticed was, for me to be able to train those people and build those systems, I need to be spending 9 to 5 with them. How am I going to spend 9 to 5 with those people whilst I have 5 customers, 6 customers, 7 customers calling me a day? I need to wake up earlier. So I started to wake up. I started to get home super flustered, and I'd be in bed by 7:30. And then it was by accident. Like, I got home 7:30, and then I woke up at 2 a.m. Okay. I still remember, it was like the first time that this had happened, and I've still got the date. It was September 5th, 2023. So I wake up at 2 a.m. I can't get back to bed. I go, you know what? Fuck this. I'm going to go to the gym. I'm going to start my morning routine, and I'm going to get everything going. So wake up, do some Wim Hof. So I've been doing Wim Hof for 16 years. Okay, all you Bondi people, all right? 16 years, cold showers every single day.
Yeah, right.
So wake up, 2 a.m., do the Wim Hof, jump into a cold shower, black coffee, go to the gym, do my weights, get home. I always like to do 15 minutes on the Peloton, so just to be able to stay trim.
Yep.
We're in a shallow world, unfortunately, so you do have to maintain a good figure. I don't care what anyone says. And then after that, I would do my yoga. And I'm not talking like, oh, that's sanasana. No. Just do 10 minutes of instructed stretching with deep breathing involved.
Loosen up and stuff.
Take the dogs for a walk. Come home. It'll be about 5:30. Between 5:30 and 8:30 a.m., or if it was earlier or later, what would end up happening is I would be able to do so much deep work that I would probably be able to knock out a day's worth of paperwork within those 3 hours. And that left me the 9 to 5 to be able to train people. You can't be training people from 9 to 5 every single day. You can only spend 2 or 3 hours. So what happened was, let's say I would train them from 9 a.m. to 11 a.m. Between 11 and 5, I'm able to take more meetings. I'm able to take on board more customers. I'm able to complete more things. So what ended up happening was I was probably getting more work out in those 3 hours in the morning because no one's distracting me. Nobody's coming to me and be like, hey, how was your weekend? Or, hey, I've got an issue with this post on social. I'm like, and I'm knee deep in a $2 million deal. And I'm like, I need to settle this because, I'm thinking about keeping the business profitable at the same time. So it was born out of necessity. And when you ask me that question, is it still the same with the baby?
Yeah.
Thank God I had that morning routine up until Charlie was born. And the reason I say thank God for that is because it allowed me to set up the business in a way where I am now no longer needed every single day sitting there. Hey guys, this is how you structure a, I'm going to take an easy example. This is how you apply for the first home guarantee. These are the documents that you need to send to the client because it's not only approved by the bank, it needs to be approved by the Office of State Revenue, one of them, okay? Yep. One of those offices, you need to send in the form. It's not easy. You need to be able to jump in and do these sorts of things, okay? So thankfully, we're now in a position where I don't have to do it and I can now do, the constant wake ups throughout the night for little Charlie and be able to feed him and make sure he's okay rather than me wake up at 2 a.m., jump on the computer and smash out the deals.
Systems and all that kind of stuff.
Yeah, and, I did it for 18 straight months, I think it was 18 months, 2 years. September 5th, I did my first 2 a.m. wake up on the past Monday, the Monday that just passed. So the first time I did it again, and it was the best feeling in the world because I got like 4 hours of work done. But, why did it happen or how did it happen? It happened because, number one, I needed to get this data out and I wanted to complete the work. Number two, I wanted to make sure that I was the best version of myself. The best version of myself isn't a guy that's worrying about which bar am I going to on a Friday night. It's not the bloke that's sitting there going, oh, which restaurant are we going to go to? Or we need to go to this event because so-and-so are going. No, the best version of myself is the person that if you are a client and you come to me, you are wealthier afterwards. Okay. You are in a better position. You are able to create more for yourself. If you go help somebody buy a house worth $1 million 2 years ago in Blacktown and that thing's worth $1.4 million now. Is that not what our duty is as a mortgage broker? It's not about anything else. It's about being able to create and it's being able to make sure that people are better off financially after they meet you. By doing that 2 a.m. stuff, I was able to create those systems that was able to create more wealth for the clients that I had in my book. And thankfully, got a lot of referrals from it. Yeah, people enjoyed working with us. So
great. Well, look, one thing I want to touch on and talk about in there is, and you said making your clients wealthier. Look, there's plenty of things that we can touch on and speak about, but I think one of the really cool parts as well that we'll talk about offline was that transition between resi and commercial. Mm-hmm. I know you've helped some clients, especially in like the medical space, with those commercial deals, but I want to get an understanding from a mortgage broker where you have seen that transition work best for the clients, and what is that profile or what does that sort of client look like that is making the transition, and why are they making that transition?
A lot of the clients that are now stepping into the commercial space or investing in commercial property are business owners, and they understand the mechanics of getting a business loan rather than them focusing in on getting some sort of unsecured finance or finance attached to their business so their business would grow. They will instead focus in on commercial property and bet on the capital growth of that particular property or the rental income that's coming in that's being yielded from there because they're business owners. Teaching someone who's on a salary and trying to instruct them or get them to understand what a lease stock application is, or the deposit requirements or valuation requirements when it comes to commercial property, is often a challenge because they don't understand business. They don't understand all the parameters around business ownership, how a company tax return works, or how trust tax returns work. What they are mostly focused on is their individual tax returns, which has the negative gearing and all that sort of stuff. So what we have noticed is it's often someone that's been in business for themselves for, I want to say, 2 years. From 2 years onwards, and they're starting to look at all these opportunities around them, seeing the capital growth that's occurring with factories, with nursing homes. We spoke about this, facilities, shop fronts, restaurants. They really start to see how those properties are growing in value, and how, for people in development, a lot of the developers are stepping into the commercial space because they don't have to pay for the homeowner's warranty. That's expensive now, isn't it? Yep. And iCare is charging an arm and a leg for it, Yeah. There's so many things that are involved when it comes to insurance, when it comes to strata.
There's just more in those fit outs and stuff too. In the development
when
space.
it comes to the residential stuff, when you're doing commercial stuff, it could be an empty shell. Okay. Your profit margin could be higher. But the people that go in there, okay, you might give a 6-month free lease period, but that person's going to be a tenant for 15 years. It's not a 1-year tenancy. We're going to pick up, move, change apartments, get a mover in. There is less of a selection of buyers, but the people that are often purchasing commercial property, they've got a little bit more business history attached to them. They could still be a salaried employee. I'm not saying it's, strictly for business owners, but they've got, you're often looking at people that are 29 and up. They've had experience with residential property previously. They might be asset rich. You could have someone that bought in Mount Druitt 5 years ago for $300K, and that property could be worth 1.3 today, but they don't have the servicing to be able to go buy another residential property. They might go take that equity out and purchase using a lease stock application. And by using a lease stock application, they've still got an appreciating asset that's paying itself off, rather than purchasing something that you need to hand in. Oh, you've got a $2,000 credit card. Oh, you spent, I don't know, I want to say $400 at Westfields. Can you explain this expense?
Explain as well for people lease stocks. We've covered it on a few other apps, but lease stock loan, if people are listening and say, what's that? Give me a brief rundown on a lease stock loan.
It depends on which lender you're going to, but the best way to explain it is lease stock is an interest-only loan for 1 to 5 years, where the lease is covering the interest repayments on the loan, multiplied by about 1.2 to about 1.5, depending on which lender you're going to. So $1 million warehouse, person's put in let's call it a $350,000 or a $400,000 deposit. We've got $600,000 remaining. Okay, they need to get a loan on that. They don't want to go down the traditional routes, but there's a lease that's already in place or to be in place and all those sorts of things. Okay, so the lease is, let's say, 15 years. It's a 5 plus 5 plus 5. So we want to get an application where we're just doing interest-only repayments. Okay, ICR, it's called the interest coverage ratio. And the lease is able to cover the interest repayments by 1.2 if you're going to a Latrobe, or I'm not too sure if Liberty's doing any lease stock applications, but we'll get into that. I'll look that up afterwards because I haven't used them much for commercial. Or if you're going to a bank, it's 1.5. The difference is Latrobe's interest rates might be 1% higher because they're taking on more risk, whilst the banks might be lower, but they want to see clear tax portals and those sorts of things. If you don't want to show all your living expenses, your credit card payments, your personal mortgages, all those things, what we're seeing is people set up an SPV, or they're setting up a separate company. They're purchasing the property within that
PTY Ltd.
Yep, within that PTY Ltd. And then they're using the lease that's already on that property, or a proposed lease or something like that, to cover the interest that is going to be effective afterwards.
And what sort of deposit size are you seeing work best in those spaces? Now, it might vary asset to asset, but I don't want to give the the people the wrong impression that if they find a commercial property that's got a lease, they can get a lease stock loan, and that be it. The bank obviously wants you to put some money down. So
would you believe if I told you I got a lease stock application with 20% deposit?
Yeah,
recently.
That's okay.
Yeah,
20%
for a $6 million property.
Wow.
Yeah.
Not bad.
It's always this is the thing about commercial lending that many people don't really understand. It's all about the sponsor, well, in the building world, the sponsor or the guarantor, the person that is backing, whatever the purchase is. If you're everyday individual, you're earning $80,000 a year and you've inherited some money and you go, I want to do a lease stock, I'm going to go buy this and it's going to cover everything. They're not going to back you, okay? Because you don't have the history or the acumen to be able to do that. But if you've got a strong property portfolio, you've been successful, strong credit score, they might look at your application and they go, okay, we're comfortable with this person because they haven't missed a repayment in 20 years and we're happy to back them based on the lease. And we've seen their other stuff before. We're more than trusting to be able to lend them this money. But most common cases, you're looking for that 35%, 35 to 40%, I did want to bring up that 20% one because things are more possible in the commercial world if you have a strong history. But if you're new to the game, you got to make sure that you've got a stronger deposit.
Okay, so 20 to 35% for those lease stock loans.
Yeah, let's start at 35%. I don't want people calling me saying that they've got a 20% deposit.
I heard on the podcast. We've had that before. Tell me a few of those learnings and experiences that you've had in that space. Maybe that's across a couple of those deals as well, because I know there'd be plenty of them out there. The 20% deposit, for example. But what are some other ones that I'm sure the people listening to this can take some learnings from that either you or your clients have learnt from? If I say that,
that's a great question. Okay. So I've got a client now. All right. Love this bloke to death because he's given me like 20 mil worth of lending in the last 9 months. Okay. Strong commercial client who got stuffed over by his previous broker. And that's how that person ended up coming to me. So I've known this guy for quite a few years. I see him at BP. Like we're just filling up petrol. And he's like, I love what you're doing. I love the videos, I'm like, oh, okay. If you ever need help with finance, just hit me up. I wasn't chasing him. I was not chasing this bloke. And then I get a phone call 6 weeks later and he's like, I've got a private loan against this asset. I need to get out of it. I'm like, who put you in a private loan? And he goes, my previous broker. And I think I was paying I think we ended up saving this guy upwards of $415,000 a year in interest repayments after he came to us.
Wow.
Yeah. So he's purchased a nursing home, and nursing homes are a specialized asset. There's only 4 or 5 lenders that will really go near it because they're always ending up on a current affair. There's always news stories. This person got neglected, that sort of stuff. So lenders don't want to go near it. And I'm not even saying like your Liberties, Liberty and Latrobe won't touch a nursing home. They won't touch it. So the 4 lenders that we had are Westpac, Westpac St. George, NAB, CBA, and ANZ.
Yep.
That was it. Those are the 4 lenders we could go to. And then Judo, if we wanted to submit an application there, but the interest rate's going to be higher. So we need to adhere to Big 4 standards whilst we're performing an exit from a private lender. And why was this person with a private lender previously? It's because the other broker was getting them to send in these essays of information that the bank didn't need to see. The bank didn't need to see that this guy took a 6-month holiday. They don't want to know that. They don't want to know that he took a 6-month holiday a couple of years ago. That's what was in this essay. I'm sitting there, I'm like, what did this broker do? And Judo turned around and they go, guys, we're not comfortable with this. Everything's all over the place. You asked me about this deal and, why has it come to me or why is it at my desk? So it comes to my desk. We do the valuation. Valuations, I think I ended up at 8.5 or 9 mil. The debt on it is 4.2 something. It's somewhere around there. So it's below that 50%. The lease on it was $720K a year.
Wow.
Yeah. $720K a year. With the private lender, and I'm telling you this now, They were just breaking even, if maybe making 3K every single month, because that's how high the interest rates were, the risk fees, the SDAB fees, and they had to do a yearly renewal. We moved them over to Commonwealth Bank. By moving them over to Commonwealth Bank, we ended up saving them $37,000 a month. That's such big money. And people are like, oh, just go with a private lender. I'm like, no, you have no idea. They might advertise a rate, but they're buying that money. They're putting it in a warehouse. Like they're building a warehouse facility to be able to lend that money. They still have to pay for that money. They make their money on the SDAB fees, the risk fees, and those sorts of things. So interesting deals. That's sort of like the best example. And people will say to me, oh, why do we need to pay so much for a valuation when it comes to commercial property? Yeah. So
dealing with some vowels at the moment. Yeah.
So let's say we've got two shops downstairs. Okay, we're in the city right now, Goulburn Street. There's two shops downstairs. One is 50 square meters and they're a restaurant. The other one is 50 square meters and they're a laundromat. Are they going to have the same desktop valuation, 3 bedrooms, 1 driveway? No. The 50 square meter restaurant's going to have range hoods. It's going to have grease traps. It's going to have, fridges, freezers. The laundromat might need some certain requirements around plumbing, but you don't need all those extra things that a restaurant needs. So every commercial property is unique. And that's why you need to send a valuer out. When it comes to residential housing, 3 bed, 2 bath, two car spot, that is so different. And that is why you're able to do desktop values, AVMs, because a lot of Australia's property market is very similar until you get into the luxury side or the new development off the plan side. Outside of that, things are pretty much the same, Oh yeah, we've got a basement here or something. That's on the plans. Here are the plans. Is it built? Yes. Approved. Done. There was a valuation done a year ago. Let's look it up on RP data. Perfect. The photos are the same. Yep. We'll give you a desktop valuation for $1 million because that's what the recent sales are. When it comes to commercial property, every single one's different, and every single valuer will charge something different because I think they've got like the discrepancy to do so. Like, oh, is this in Katoomba? Yeah, I'm going to charge $5,000 for that. I've got to make it worth my time because technically it does have to be worth their time too. So yeah, it's a very interesting thing, but that's one thing that people always need to realize about commercial lending. Treat it like a business transaction. You need to have money aside for the valuation, for the SDAB fees, for the setup fees. There's so many things that are involved that you can't think to yourself, oh, this is just like I'm purchasing. And I'm taking the residential housing and I'm bringing it to simple terms. Oh, this is just like residential housing. That's also complicated. But with the commercial lending,
different gravy.
It's completely, it's pepper sauce, mushroom sauce. They're both gravy-based sauces, except there's different ingredients that have to go into them. And then they still buy a property. Yeah. I'm going to be using that from now on.
I was going to say, not bad. I haven't heard that before.
Yeah, no, you just made me come up with it. But they're different types of sauces, but they're built on the same base and they taste very different to each other.
Yeah. Both built on land and have different. That's not too bad.
Yeah.
Okay, so tell me, any other ones that sort of come into mind in terms of commercial deals, something with a few hairs on it or anything like that?
So you want to know any other ones? There are certain times in your life where you might get the opportunity to complete a deal that you cannot procrastinate. If this hits your desk, you do it straight away. So I want to bring you back. This was May. One of my referral partners calls me up and he's like, hey, do you do commercial lending? I go, yes. And he goes, okay, I've got a $14 million deal for you. I fall over. I go, what are you talking about, a $14 million deal? Okay, who just has a $14 million deal that they got to give someone? And he goes, no. I gave it to another broker, but they got a decline from this bank and they need to be able to get this across the line. I'm sitting there, I'm like, what is going on with this deal? Speak to the borrower, I think it was 6:30 p.m. And I'm going through everything. This business had like $2.7 million in net profit. They had a very strong property portfolio that was only geared up to like 60%. There was a lot of things in this deal where I'm sitting there and I'm like, what happened and why did this get declined? Found out it wasn't declined. Okay, that's just what the referral partner said to me. But what the previous broker that they were working with. And you know me, I don't want to badmouth anyone.
Yeah.
Okay. But what they had attempted to do was get a cash out from one major lender and then to purchase with the deposit. So they got the cash out with and deposit from one of the big four.
Yep.
And then they'll go into one of the, I'm not going to say big four, but one of the other majors, one of the top 10 lenders. Okay. Yet again, I'm trying not to badmouth anyone. And they tried to do a lease stock application over here. But to be able to secure the lease stock, they also needed to use the company income to securitize the lease stock application because they didn't calculate the ICR correctly or anything. And so what this bank wanted this bank to do was release the GSA so that they could take the general security agreement over the business over here, and then they'd come in second ranking. So you've got two banks punching on, and they're like, and I'm sitting there, I'm like, why'd you go to a second bank? Why didn't you just put it at this bank over here? So I get this deal. They've got a massive property portfolio. And I'm looking at it, and all I'm thinking to myself is my son's about to be born in about 6 weeks. Okay, I'm short-staffed as well. So my 2IC had a baby 30 days before me.
Oh, good timing, man.
Absolutely perfect. So his son was born June 9th. Mine was July 8th.
Yeah.
And then we had already approved someone's annual leave earlier in the year. So I'm running on fumes. I'm running on absolute fumes. But you see a deal like this, and all I'm thinking to myself is this is my break even times 2.2, okay, for the next month. That's all I'm thinking to myself. I'm thinking to myself, okay, if I get this deal approved, if everything goes smoothly, I need to make sure this gets done because my wife can have the baby at any second. My 2IC's partner can have their baby at any second. That's all I'm thinking about. I'm not thinking to myself, oh yeah, $14 million. No, I would always be thinking that, but this was from necessity again. I always bring up necessity because people see this stuff and they're like, oh wow, like how'd you get that? I got it. I saw it. I didn't procrastinate on it because I knew there was serious necessity behind it. It allowed me to take a few more extra days off or extra weeks off with my wife. It allowed me to do those certain things in the background. So I got the deal. I realized it was a Big Four deal, but the Big Four don't give you their servicing calculators, even if you're an accredited commercial broker, because they want you to connect with one of their commercial bankers first before you go and submit the deal, because they need to be able to look over it and make sure it's suitable, do your KYC, make sure they interview the customer, understand who it is. I grab it, I build my own servicing calculator out. And in that servicing calculator, I calculate my LVR, my ICR, my working capital ratio, the capital adequacy ratio, and the debt service coverage ratio, which is the exit afterwards. I'm just listing those off very quickly because people don't want to hear what each one of those things are, but you as a, in this space, you understand.
Appreciate it.
Yeah. So I build all that out. I include the whole property portfolio. I show every single ratio, and every ratio was well above what the required ratio was. I submitted the deal. The banker calls me up and he's like, I've never seen something this thorough. And I'm like, I need this to be one hit, one touch. I can't have back and forth because all I'm thinking about is my wife at home. I can't have back and forth. I needed to make sure it was absolutely perfect from day dot. Book the valuation in, formally approved, settles 1 week early. I have never, ever in my life seen a transaction like that settle a week early. Yeah. So that was, sometimes you get given these opportunities, and I like to call it, it's a test to see what your character's like, or if you are as good as you believe you are. And I always said to myself, I want to be able to be the best, and I want to be able to, and best version of myself, not best in the market. There's plenty of brokers out there that are better than me, but I want to be the best version of myself for anyone that interacts with me, because what is built from that is they get to be wealthier afterwards. Nobody wants a lazy broker. There's 22,000 brokers out there. You're competing against some of the best in the market. Why should they come to me? They could go to anyone else. Yeah. So you always got to be able to perform so that those people can end up in the better position afterwards.
And what are some of the other sort of, sort of key takeaways or experiences from this space, this resi commercial space, or from the clients that you guys are dealing with? What's some of those sort of
the biggest learnings?
Advice and learnings, for just trying to sort of get some nuggets out of you for our audience.
For first time residential, for first time commercial property purchases. So you've come from the world of residential, and you might have 2 or 3 residential properties, and you think to yourself, hey, I've got to diversify. I've spoken to my buyer's agent. They want me to move into this space.
Yep.
Okay. So I'm going to go into the commercial property space. It is not as quick as resi. It is not as fast as Resi. Resi, we can get a contract of sale, valuation done via desktop. You've got the deposit, got these things. I've gotten a deal formally approved with NAB. Yeah, I was on there. I was thinking, am I allowed to talk about which bank? In 58 minutes from submission.
Wow.
Yeah, because everything's stacked up correctly. It doesn't work that way in commercial. So always give yourself as much time as possible. Don't think to yourself, oh, I'm going to submit this deal and I'm going to have a fast SLA. It does not exist in the world of commercial because they've got to complete the KYC. They've got to analyze the financials. They've got to do the valuation. Valuer has to go out and inspect the property, make sure it's valued at what the contract of sale says. And you always got to understand more time is better. Don't ever agree to like a 4-week settlement on a massive purchase when it comes to commercial property, unless you're getting it for a discount, of course. But don't ever like do that sort of stuff because people need to understand. I wouldn't say there's so much more risk involved with commercial property, but it doesn't work the same as Resi. Resi, if someone defaults and they need to do the 90-day rapid sale, you can find a buyer for pretty much any property in Australia in those 90
buyer's
days.
agent will buy it.
A real estate agent will buy it. Yeah. With commercial property, I've got a factory that I want you to buy. David, I'm testing you now. I've got a factory I want you to buy. Where is it? What's in there? Who was in there previously? Has it burnt down? What's wrong with it? Is it properly coded? No. It's going to take me too long to get a tenant. You don't have that luxury of every person in the market needs something like that. Not every person in Australia needs a large factory. Not every person needs a logistics center where they need to distribute things. Yeah. Not every person wants to buy a nursing home. So there's certain requirements and parameters around that where you have to reduce the risk. Understand that it's a longer timeline. Anyone that wants to get into the market when it comes to commercial property, you need to understand it's a longer timeline, but you can achieve great capital growth and you can expand your property portfolio faster if you use that avenue as well, if you've got the right broker, accountant, financial planner, buyer's agent in place.
Yeah, okay, for commercial.
Yeah.
Yeah, fair enough.
Yeah.
What is the next plans for you guys as a business, for you personally? What are you working on? Where are you looking to go? Where are you looking to take this?
So, oh man, that's a very long-winded question.
Yeah, I mean, we're deep into the pod now, so
when I say that's a long-winded question, it's because I've been working on other projects for the last 24 months. We just launched our referral partner portal app. Like it's a mobile app where, let's say you become a referral partner of ours tomorrow. You like the way we work. You like the transparency. We will onboard you onto our app. It's not released to public. It's only specifically for partners. And what they do is they have their own web-based portal where they can log in, they can refer clients immediately, they can track deals at all times and read all the notes based on their client, and they can also order AVMs or desktop valuations via our portal. So we launched that last week. We onboarded, I think we've onboarded 5 new referral partners since we launched that. So that's been fantastic. The next thing, which is hopefully launching at the end of this month, is our It's Medical Finance product. What we noticed was a lot of doctors in the marketplace, they don't want to be on hold for 45 minutes waiting for a bank lender to come to them. And they need people that work after hours. So, if somebody's waking up at 2-3 in the morning, they kind of want to work with that person sometimes because they're not finishing from the hospital at that until that time a lot of the time. So that was born with the former director of Medfin. So Medfin is a subsidiary of NAB. So former director of Medfin, my wife's an optometrist. I've got my 2 business partners from Melbourne who are also doctors. So we're going to be launching that. But the big thing that I'm most excited that we're launching.
Yeah, it's all
covered. No, it's all built, man. It's all built. So like this isn't imaginary. I'll open up my laptop, show you everything. Is Home Loan University. And you and I spoke on the phone about this last night. We actually had a good laugh about it. I wanted to research the statistics and make sure I was correct in saying that.
Yeah.
Now, we don't have 100% accurate statistics. These are from 2024. But there are 4,000 new brokers coming to the market every single year. Every year, there's 1,600 either inactive or brokers leaving the market. So if you do a ratio, okay, there's 22,000 brokers in the market, 1,600 divided by 22,000, what's that? 8.1%. So you've got 8.1% of the industry leaving every single year. That's not a good statistic. But if you measure that based on how many people coming in, how many people are leaving, you know, you got all these people with hopes, aspirations, and dreams, and then you got like 37% of them are leaving. They're like, F this, or I'm selling the business. I don't want anything to do with it. So we opened up Home Loan University. Why? Because we've seen a lot of brokers that are new to the industry struggle. They struggle with understanding the concepts. You might have come from a bank. Okay, when you're in a bank, you are favored upon a mortgage broker's application because they have to pay a mortgage broker a commission. When you're in the bank, you're an employee. You've got a salary. You get right of priority.
Yep.
So your applications will go approved faster. You have to get used to understanding that you don't have that speed. You don't have a marketing team that is going to be sending out weekly EDMs. You don't have a coach that's teaching you how to scale a business, how to make sure that it's the right time to hire someone, how to build SOPs, how to build systems, how to submit a lease doc application. So we built out Home Loan University to be able to provide what I've learned, okay? And I know I've spoken a lot this podcast, but provide what I've learned and what others have learned to the market so that they can become even better. And this isn't for every broker. You could be a broker listening to me right now and be like, oh, I know more than him. Yeah, cool. I'm not building this for you. Mm-hmm. I'm building this for the person that is new to industry.
Yeah. Okay. Mortgage brokers. Yep.
And they don't know how to sell themselves. They think to themselves, oh yeah, I'm going to be a broker. I'm going to put my logo on a shirt and all my friends are going to come to me for my mortgages. Your friends don't want to tell you how much they're earning. Your friends do not want to tell you how much property they own. Okay. You need to think to yourself, how am I going to attract someone like, I'm just going to use myself as an example. How am I going to attract Joseph Daoud to be a customer of mine? Okay, what do I need to display? Why is he going to come to me? Because of words that I say? Everybody could say words. What proof is in the pudding? So what you need to do in building up your brand and being able to secure more leads and also at the same time have a large successful trail book afterwards.
Yeah, perfect. Well, look, I think there's going to be great value in that, and I'm
hoping.
I mean, yeah, similar to the buyer's agency industry, there's a lot of people sort of coming in very quickly, uneducated. So yeah, if you're helping out those new brokers, then hopefully it gives them the best opportunity that they can get to.
And I'm an open, transparent book. If there's something in there that you think is missing, or if you think I'm incorrect, call me out. Yeah. Why not? Well, I'm not going to learn from it. People in this industry need to remove a lot of their ego a lot of the time, because when you do that, that's when you actually get to learn and you get to meet people and you get to understand new loan products and build great relationships. This is the best part about the Home Loan University. You are no longer in a transaction-based industry, okay? You are in the relationship industry. You have someone in your trail book, manage them. Expect to take care of, 200 clients or something along the lines of that, because if you could take care of 200 of those, guess what? You're probably one of the best brokers in Australia.
Yeah, definitely.
Yeah.
To end on... We'll get to
you want to do an episode 2, don't you?
No, we'll get to our normal ending.
He doesn't want to do an episode 2. I'm sorry, guys.
To be continued. Yeah. I wanted to ask you about I wanted to get your thoughts on. I've seen a couple of videos, and I know where you sit. And it's always good to share people's opinions. But the government, Anthony Albanese, has just brought out some recent changes coming out 1st of October for first home buyers and getting into the market, income caps and all those sorts of things. Wanted to get your understanding or your thoughts on what that will do for first home buyers. So I believe the legislation that came out was no income caps for first home buyers, LMI waived, and we still have the stamp duty threshold at where it is, but that's what's coming out to help more and more homeowners come in with 5% deposits and get into the property market. I want to get what your thoughts are on that.
You want the visceral reaction. Okay. So my thoughts. I've got 5 key issues with this. The first issue is you've got the government going up and saying, oh, you could buy with just a 5% deposit. The first home guarantee is a national scheme. Stamp duty is payable to your New South Wales State Revenue Office or the Office of State Revenue. So even though this national scheme might be telling you that you could buy with just a 5% deposit, if you buy over what the stamp duty concessions are in your state, guess what? You're going to get hit with a stamp duty bill. So New South Wales is a great example of this. They've raised the purchase cap. So previously, I think it was 950 or 900,000. Can't remember off the top of my head, but they've raised it all the way up to $1.5 million. Okay. After you purchase if you're a first home buyer in Australia, in New South Wales, stamp duty is free up to 800,000. Between 800,000 and $1 million, there's a concession. So you still have to pay stamp duty. Okay, I think it's about 20 grand once you get up to that high mark. And then after $1 million, full stamp duty is applicable. Great. So you are now going online telling people you could buy with just a 5% deposit. No, it's a 5% deposit plus stamp duty if you're buying all the way up to that $1.5 million mark. And then you have people saying to me, oh, but just buy a property under that $1.5 million mark. Cool. Where in Sydney can you buy for less than $1.5 million? Now, I know there's a lot of places, but if you want something that you are purchasing for a family, you're not really looking at 1-bedroom, 2-bedroom apartments. You want house, land. I'm pretty sure Sydney's $1 million ring stretches all the way up to Penrith now. So stamp duty is going to be applicable. Issue number 2 is it has not been properly explained whether this has to be an owner-occupied property. Now, if you go to the government website, it says owner-occupied. Yep, you do have to live in it. There's going to be some random on TikTok scrolling through. He sees one of the ads, you could buy a property with just a 5% deposit. Okay. They go speak to a broker. Oh yeah, I saw the scheme. It's just a 5% deposit. And then that broker might have done a 1-day course and submitted their assignments via ChatGPT and gone, oh, I'm going to apply for the first home guarantee and I'll get them pre-approved as an investment loan. Yeah, it's not applicable as an investment loan. It's owner-occupied loans only. Your income that you need to earn if you're purchasing something over $1 million is upwards of 150 grand. Okay, your household income. If you want to buy something all the way up to that $1.4 million mark, you need to have a household income of 250K. And you need to make sure that you don't have credit cards, HEX debt, car loans. So that's issue number 2. Issue number 3 is you are also going to have buyer's agents out there, and I'm going to call them out right now. I'm sorry to say this, but you're going to have buyer's agents out there that are going to say, yeah, just live in it for 12 months and then make it an investment property. There's a big issue with this that a lot of people aren't calling out. This is not the same as a stamp duty concession. If you make the property an investment property and the government is still a guarantor on the property, they are going to come after you. They're going to come after you and they're going to give you a nice fine. And they're also going to make you pay the lender's mortgage insurance, whether it's $20,000, $30,000, $40,000.
Is that if it doesn't increase in value or just...
No, so even if it increases in value and goes
to get the guarantor off.
To get the guarantor off, yes, but you have to monitor that.
Yeah.
Okay, so you're the government, I'm a buyer, I've purchased with a 5% deposit. I haven't approached the bank and said, I want to do an internal refinance and remove the guarantor. I haven't approached my broker and said that. I've just, it's gone up to about 1.6. The government is still a guarantor until you remove them. And they could still hit you with that lender's mortgage insurance. Okay? That's a huge issue. And it's not a 12-month cap like the stamp duty concession. Stamp duty concession, government understands. People move, okay? Oh, I might have to move for work. This isn't going to be my own occupied property anymore. I have to go rent something somewhere else and I need to make this an investment. Okay, that's fine. You lived in it for 12 months. That is okay. With this, if the government is still a guarantor, they are going to come after you for the lender's mortgage insurance. Issue number 4. They have removed the person limit. You can purchase up to 4 people and buy one of these properties. So let's say, I wish I could use the whiteboard right now. Let's say myself, yourself, and 2 of the blokes on LinkedIn, we go and we buy a property together.
Yeah, the boys.
All right, you got 10 grand. We each got 10 grand, 40 grand. We've gone and buy an apartment down in Bondi. We bought a 2-bedder. Yeah, perfect, guys. All right, do you know what a 2-bedder is? You're going to put bunk beds in every single bedroom because they're owner-occupied properties. I know I've said that a number of times. But if all 4 of our names aren't on the electricity bills, the council rates, the water bills, on the home loan, guess what? They might still do an audit and check that. Now, they don't have enough government workers to do that sort of stuff. But let's say you get married. I get married. Perfect. Our partners can't apply to be part of the first home guarantee anymore because our spouses have used the first home guarantee to purchase a property in the past. What if someone gets divorced? Does that mean that she's now in divorce court punching on with 4 other blokes of how much she owns the property? People aren't thinking of this stuff. They're just saying 5% deposit, 5% deposit. Let's stimulate the market. Let's build it back up.
Yep.
And then the last thing that I really have an issue with is people aren't explaining this clearly enough. Okay, so yet again, I know the first 4 were specific. Number 5 is, I went on LinkedIn the day this was announced and everyone was like, oh, you can buy with just a 5% deposit. I'm like, that's not the message you want out there. You want people to behave in a financially responsible way when you are a mortgage broker. Okay, by putting someone in a 5% deposit loan, that means they've got a 95% mortgage. They're going to be paying that off for the next 30 years. Their repayments are going to be so high. Be careful with what you are telling people out there, okay? Because this is what's going to create issues in the long run. And I can guarantee you, property prices are going to spike up. And in 3 to 6 months' time, you're going to have Albo on a bloody podium going, oh, we were looking at the modeling, and this said that first home buyers are going to be able to get in the market. And this wasn't our modeling. This was this people. And I'm just sitting like, it's just, there's going to be a deflection. There's going to be people that miss out, okay? And you are now battling, because of those income caps, you are now battling other like high income earners. You're earning 100 grand, I'm earning 500. We're at the same auction. We like the same property. You're pre-approved for 700K. I'm pre-approved for $1 million. Property goes for 850. You can't buy it. I'm going to buy it. This is the problem. And they haven't done this. Increase efficiency, increase supply when it comes to property development at a stable level. Don't increase demand. We've already got plenty of that.
Yeah, they don't get it.
Oh man, they're just numpties everywhere. They're so imbeciles.
Yeah, that's the issue that I see with it as well.
Advice on this, by the way, was general in nature. Speak to a financial professional before you go and apply for a home loan.
I'm going to cut that bit out, but just to get you in trouble.
Yeah.
The way we usually wrap these things up, Joe, is I ask you for a bit of advice that you can leave for our audience. So it could be targeted at anyone in any of those sort of niches, and a quote you live your life by. So start with me and give me the good, solid hard advice for our audience.
Get a
what
good
they need to hear.
Get a good accountant. I'm not even talking about a mortgage broker yet. I'm talking get a good accountant. Because if you are starting business or if you're a high income earner, speak to an accountant that has been highly recommended, that is very reputable, because those are the people that are going to protect you in the long run. Okay. If you've just started a business, you're working in e-com and you've generated $300,000 a month in revenue. Okay. Make sure you have a good accountant, because they're the ones that are going to make sure that you have enough money left over to pay your taxes at the end of it. Taxman always gets his money. Don't worry about that. So get yourself a good accountant before you go and enter any of these ventures, because they are the people that are going to be able to track what you have purchased or what you're doing, and if you can afford something. After that, the accountant will refer you to a broker that they use, someone that they trust. 22,000 brokers, 1-day course, ChatGPT. Subscribe to the mentorship program. I'll teach you how to be a good one. But make sure you speak to a good accountant first, because they are often the hub of a good network of financial planners, buyers agents, mortgage brokers, asset lenders, those types of things.
Mate, totally agree. And if I add anything to that, I was like, I would say don't pay the relationship tax if it's just the accountant that like your parents have recommended to you. I did that, and the accountant, I still remember this. I was sitting in his office. I was thinking about selling a property, and I was like, can you just send me a list of what I can include in the cost base, or what's calculated in the cost base when I sell this property? And he just looked at me blankly. He's like, what do you mean cost base? And I went,
what?
Yeah. So I've actually moved on from using that accountant, but that would be my advice, is don't pay that relationship tax. And look, tell me, Joe Daoud, what is a quote you live your life by?
Do better if possible, and that is always possible.
Simple as that.
Yep.
I appreciate you coming on the Everything Property Podcast, my friend. We'll have the links in the bio. Best of luck with the...
everything. Don't list it.
Yeah, literally. It's going to be too long.
I've got a lot going on.
Yeah, perfect. Well, look, man, appreciate you coming out and coming on.
Thank you.
And we'll talk again soon.
Thank you, mate.